Hi folks, welcome to another episode of Who Said What. I'm your host Krishna, and for those of you who are new here, let me quickly set up some context for what this show is about. See, the idea is that we'll pick the most interesting and juiciest comments from business leaders, fund managers, and the likes and contextualize things around them. Now, some of these names might not be familiar, but trust me, they are influential people, and what they say matters a lot because of their experience and background. So, I'll make sure to bring a mix. Some names you'll know, some you'll discover, and hopefully, it will give you a wide and useful perspective. Now, for all the sources mentioned in this video, don't forget to check out our newsletter. The link is in the description below. With that out of the way, let me get started. For nearly 6 quarters, Titan's stance on lab-grown diamonds was consistent. Quarter after quarter, even as analysts pushed the narrative of lab-grown diamonds as the next big disruption in the Indian jewelry, management refused to play along. Back in Q1 FY25, Titan's leadership was clear that whatever noise existed around lab-grown diamonds was not showing up where it mattered most, which is inside their stores. The management said they were actively tracking customer behavior across Tanishq, Carrot Lane, Mia and Zoya, and yet were not seeing material inquiries. What they were hearing instead was something far more defensive than aspirational. Customers were not asking for lab-grown diamonds. They were asking whether the diamonds Titan sold were natural. Some went so far as to demand certification that what they were buying was entirely natural. In other words, LGDs were entering the conversation not as a product customers wanted, but as a source of anxiety they wanted reassurance against. The management repeatedly stressed that the growing narrative around lab-grown diamonds was being driven more by analysts, media coverage, and the rapid growth of new players than by actual consumer pull. By Q1 FY26, Ajay Chawla, the CEO of Titan, would explicitly frame the disconnect by saying that despite 50-odd players, over 100 stores, and multiple online platforms, the narrative is far larger than the reality. Titan's own estimate placed lab-grown diamonds at less than 2% of the overall diamonds traded market. This he called a hard reality check. They even said that the wholesale prices for lab-grown diamonds were falling fast and that retail prices were falling. By FY26, retail prices in India had dropped to somewhere between 30,000 and 50,000 rupee per carat, and newer players were undercutting even that. The barriers to entering this business were low and there wasn't much to differentiate one LGD seller from another. Now there was plenty of capital chasing the opportunity. Private equity money was fueling aggressive store rollouts. It wouldn't take much, they suggested, for another 100 or 200 lab-grown diamond stores to pop up across the country. But this was exactly why Titan was hesitant. The falling prices, the low barriers to entry, the ease with which new players could replicate the model, management saw all of this as a warning, not an invitation. Without some kind of proprietary edge, they argued lab-grown diamonds would turn into a commodity business where the only pitch is bigger stones for less money. In a market like that, brand doesn't count for much and margins come under pressure quickly. Now Titan was clear that it had no interest in entering just for the sake of being there. If the company was going to participate, 3 things had to line up.
For Titan to make a meaningful play, one, the consumer should be excited and there is something that she wants. 2, what is the IP that we can create? And 3, unit economics have to start making sense.
Now Titan also made a point that often gets overlooked. The consumer herself was confused. Management described customers as uncertain. That is, they are curious about lab-grown diamonds, willing to experiment, but also worried about whether these stones would hold their value. First-time diamond buyers were especially hesitant. For many Indian households, the first diamond purchase happens somewhere in the 70,000 to 1 lakh range rupee, and at that price point, the idea of diamonds as a store of value still matters a lot. The people actually experimenting with lab-grown diamonds, Titan observed, were not new buyers. They were existing diamond owners, people who had already built their collections and were now picking up lab-grown piece on the side as an addition, not a replacement. Now, given all of this, Titan's answer for most of the last year and a half has been patience. Even the management was pretty upfront about it. They were in a wait and watch mode. Now, of course, analysts pushed repeatedly, sometimes bluntly asking what exactly was stopping Titan from entering a segment where margins appeared healthy and competitors were scaling quickly. The answer each time was not that Titan could not enter, but that it would not do so prematurely. And yet, despite all of this, Titan has now stepped into the lab-grown diamond space. So the question now is, what changed? Are the customers finally asking for lab grown diamonds in a way they weren't before? Has Titan figured out how to make this business defensible, or have they decided that doesn't matter as much as they said it did? And if none of their three conditions have actually been met, why move now? Is this opportunity, or is it the worry that staying out costs more than going in? That's it for this episode. See you in the next one. Of course, analysts pushed repeatedly some. Now, of course, the analysts pushed repeatedly us in a market like that. Brand doesn't count.